Welcome to the Salmon Runs YouTube. Enjoy the video.
In this video, I will explain how to make ledger posting. First, understand that ledger posting is the process of transferring financial transactions from the journal to the individual ledger accounts. This step is crucial for organizing your financial data and preparing for financial statements. It helps you see the balance of each account, like cash or accounts payable, at any given time. We'll cover the fundamental principles to ensure accuracy and efficiency in your bookkeeping. The core of ledger posting is the double entry system. This means every financial transaction affects at least two accounts with equal and opposite effects. For example, if you buy supplies for $500 cash, your supplies account increases by $500, a debit, and your cash account decreases by $500, a credit. Understanding debits and credits is fundamental to correctly recording these movements in your ledger. To post a transaction, first identify the accounts involved in your journal entry. Next, determine whether each account is debited or credited and by what amount. Then, transfer this information to the respective ledger accounts. For instance, a $200 payment for rent would be a debit to rent expense and a credit to cash. Always include the date, a brief explanation, and the journal reference number for easy tracking. After posting all transactions, calculate the ending balance for each ledger account. This involves summing all debits and credits in each account. Then, prepare a trial balance, which lists all account balances to ensure total debits equal total credits. This step is vital for detecting errors before preparing financial statements. Remember to check the description below for a link to some fantastic leak-proof meal prep containers, as well as other great deals we've found for you. This helps keep your finances and your meals perfectly organized.
Thanks for watching. Consider subscribing if we helped you.